Big Dog here with another video on US oil. Huge opportunity coming up very quickly on US oil. Now, over the last couple of weeks, we've seen US oil fall from around about $42 a barrel all the way down to $27 a barrel. Now, this is due to the fact that there's been a price war between Russia and the Middle East. The opportunity is coming up where support has been found, and we have to start thinking about US oil recovering. US oil is going to move up to around about $42 a barrel, hit resistance again, and then fall down again to a projected $21 to $20 a barrel. Is it possible? Well, all of that coming up right after this. The big question here is, can US oil start recovering? Is it time to start thinking bullish on US oil? And where can US oil go to? And when it hits resistance, is this the top? Are we going to see the downside move continue all the way down to $20 to $21 a barrel? Now, this is not just me thumb-sucking it. This is actually true technical analysis that's proven to be successful over time. And we've seen more often than not that when we look at these type of patterns appearing on the charts, price does something. Hi traders, my name is FX Big Dog, and we're going to go ahead and take a look at the opportunity on US oil right now. And so what I'm going to do is I'm going to flip over to the chart, because the chart is what speaks for us. And if you look at the chart right here, I'm seeing US oil pricing at, and in fact, I'm going to go ahead and do something right here. I'm going to go ahead and clear up everything that I have on my chart right now to get it into a new start. Let's go ahead and do this. All right, let's go ahead and pull this up right here. Now, I'm going to go ahead and get rid of, let's see here, we can get rid of all the drawings over here. And once I've got all the drawings taken off over here, I'm going to go ahead and revisit the opportunity right here that I'm looking for support and resistance. So as I go ahead and draw in here, and I'm going to do this right here, I'm going to draw in a very clear indication of a downward channel right here, and then I'm going to go ahead and use this downward channel. I'm going to go ahead and compress it a little bit more, and I'm going to take this downward channel that we've got right here and take the top of the channel and then go ahead and connect it to the bottom right here. Okay? Now, take a look right here. All I've already done here is I've created a support level right there to confirm my support level right about here. And I've gone ahead and I've taken that high, this high right here. Oops, it looks very small compared to the other. Let's make it a little bit bigger. There it is. I've taken that high and, of course, this high right here. And I've identified support and resistance. Now, with support and resistance, what are we thinking? We're thinking price is going to move back up again. Now, there's no doubt in my mind, before the price war on oil took place, we were trading right about here, just shy of $42 a barrel. And we had the US oil actually moving a little sideways. Then we broke out of this range, and then if you can take a look at the range distance right here, the range distance is around about 1,600 points right here. Around about, yeah, call it 1,600. And you can see right here, we've dropped down to about 2,200. Now, this is the deal. If we take a look at the way US oil is set up right here, I'm going to put some Fibonacci levels in play here as well. Let's go ahead and clear this up so I can get to the points. So I'm going to go ahead and put some Fibonacci's over here. I'm going to go ahead and connect it down here below. All right. We notice that price is indicating that we could move down to this level right here. I'm going to go and mark it off. Okay. And notice the price, $21 a barrel, right? $21 a barrel. Now I'm going to go ahead and do something else. I'm going to mark off inside here this level that we broke out of right here. This is the level I'm referring to right here. And let's go ahead and mark off, let's see here. I'm going to go ahead and mark off, this is what I'm going to use here. There we go. I'm going to mark that off right here. I'm going to get a price tag on this. And I'm going to go ahead and show price. And take a look there, $42 a barrel. So this is where we had that breakout just before the weekend took place, or at least the negotiations with OPEC took place there. And then on the weekend, that's when things fell apart, when the Middle East decided that's it, they're going to go ahead and drive oil back down south and take over big market share in oil. And over the weekend, had the weekend gap, price moved down. And this is why we're seeing $42 to be a very key resistance level. Now, this is how price moves. You've got to understand that price moves in waves, right? And when price moves in these waves, we have to understand that we're moving in a 5-wave sequence. So when price moves to a certain level, it hits resistance or support, we're expecting it to have a temporary retracement move or a temporary retracement, and then go ahead and move in the direction of the trend until it completes its 5-wave structure. So this is what we went ahead and did. We went ahead and pulled up this right here. And we've got this setup right here where we identified price to have this approach here. I'm going to go ahead and mark it off right here. You can see here. Let's go ahead and take another Fibonacci level right here. And I'm going to go ahead and mark it off. And I'm going to measure out from that point to this point right here. Okay. And then you notice right here, we get the 1.618. So now we're expecting another correction move, all right, to come back. Notice how price shows us between $40 a barrel and the 382 right here, which is $41 a barrel. We're seeing some sort of resistance coming off this right here. So this is where we're expecting the market to come back to before coming back to complete a 5-wave sequence. Check this out. This is pretty neat right here. All right, we've got the larger wave right here. This is wave 1. Then we've got wave 2 up here at the top right here. Then we've got price wave 3. We're looking for wave 3 to be here. Then we'll see another correction move going up. And then we'll see another final move going back down south. This is how price is going to work itself out. Okay, we're going to see US oil completing inside swings. And this is what the inside swings look like. It's amazing how this thing works out. Look here, wave 1, wave 2. Here is wave 3 right here. Price back up to $42 a barrel. It's going to complete itself here, down here, around about the 1.618 down here at $21 a barrel. Then we're going to see a recovery, right? We're going to see price recovering itself and moving back up again to $42 a barrel. It'll continue to stay there over there before moving down further down south. And you can see right here, we could move down to $12 a barrel before price goes ahead and continues to rally back up again. So price could be moving in this region. Now listen here, if price goes ahead and trades above $42 a barrel, then we would consider that US oil will then go ahead and start heading back up to that $60 a barrel, which is going to make the Canadians very much more comfortable. And then once it breaks through that level, we could see 68, 72, and eventually come back up to 76 right here at the top. All right. But in the meantime, while this is taking place, the patterns are playing itself out. We've seen the patterns appearing right here that does indicate that, yes, we're at a support level. We're going to see some sort of recovery. Maybe negotiations go back on the table. There's something that comes out, but it's not done yet. Okay? And so how do we take this information and how do we play this out into the marketplace? How do we look at currency pairs that we can go ahead and trade? Well, US against the Canadian dollar is affected by this because the Canadians are the 7th biggest country that produces oil, and the US actually, in fact, Canada supplies the US about 2 million barrels a day. 2 million barrels a day. So you can imagine that when US oil becomes a fact, when US oil gets down to these levels, that there is going to be some sort of reaction in the market because the Canadians can only produce oil at a certain price. When US oil price moves lower than a certain level, which is around about $62 a barrel, it costs the Canadians more money to produce oil. So it's not even worth it. It's like, like mining Bitcoin. Once Bitcoin dropped below $8,000 per Bitcoin, it became worthless. It became too expensive to be a miner of Bitcoin. And so this is the reason why we saw Bitcoin fall down from 10,000, 8,000, and drop down to 5,000 and 4,000 a Bitcoin, is because of the fact that the miners had to switch off. They stopped mining. And once you've got no supply, the demand becomes, no demand, the supply becomes a problem. Too much supply at too much of a cost becomes a problem. And this is the reason why we saw Bitcoin drop into the levels we have, and why it struggles to break above 10,000, the 10,000 mark per Bitcoin. Now, US oil is very similar to that. Where anytime we start to see US oil fall to these levels, all right, it puts a lot of strain on US dollar, but also on the Canadian dollar. And that's why when looking at US oil and looking for a currency pair to be able to trade it based on the movement we've seen on US oil, the best correlation you can find is US dollar Canadian. Now let's take a look at the technicals right here, and let's see what the technicals are telling us on US dollar versus the Canadian dollar. I'm going to go here to the US dollar Canadian right here, and I'm going to go ahead and pull up this chart right here. Now you can see this chart that we are breaking through highs. Broke through a 2018 high, broke through a 2019 high. We're coming up to a level. Let me go ahead and mark it off again. Check this out. Okay, very important that you see this. Wave 1, wave 2, wave 3, wave 4 coming back to retest wave 1, and then here at the 1.618, or at least the 1.27, we have the fifth wave anticipated resistance. So we're heading into a place of very key resistance based on not only this trend line that we drew up here, but also identifying, of course, a fifth wave move. So traders, prepare yourself, get ready, all right? Start looking at US dollar CAD. US dollar CAD, a great opportunity that's coming up. We're going to start seeing US dollar CAD starting to work his way back down south. Now, this may just be a temporary move. All right, maybe a temporary move to come back down to support, maybe come back down to the trend line. It's going to go up, and it's going to go ahead and test the 2016 highs. Once it finds that, it's going to be heading much further down south. But right now, the short-term opportunity would be looking to sell US dollar Canadian. Now, I'm not going to go ahead and say just go ahead and jump in and start selling. This is where you use all of those different strategies that you've been taught how to use them. Go ahead and apply that to your trading opportunity, which means this. You want to go ahead and use some sort of trend-based system, whether you're doing some sort of scalping, whether you're doing some using patterns to identify reversal points. This is where you want to go ahead and use those strategies to start looking for selling opportunity. Find the resistance. Use a trading system or a trading strategy that has confirmations within the strategy on the lower time frame to identify the opportunity when it presents itself, because we are expecting US dollar CAD to start heading back down south. All right, well, that's my quick trade or at least move of the day, talking about US dollar Canadian and how it's got how it's influenced by US oil, and how US oil right now is indicating that a possible rally is expected. The question here is, are you ready for it? This is FX Big Dog wishing you peace, joy, and successful trading. Until next time, happy trading.